Alternative Brokerage, and I want to thank you for taking time out of your day to join us on our Medicaid-friendly annuity webinar today. We do have people still signing in here. We've had a great response to this webinar, to the topic of Medicaid planning and Medicaid-friendly annuities. So we're just kind of letting everybody keep trickling in here for a couple minutes. I am going to touch a little bit on alternative brokerage and who we are as a marketing organization and why we feel that we can help grow your business and some of the things that we offer independent agents out there as far as tools, resources, support, and things like that. And then we are going to get into the meat of this webinar, which is the Medicaid-friendly annuity product. So I'm just going to let a couple more people come in here. This is probably one of the biggest responses that we've had, and so we all know that Medicaid is a pretty hot topic right now, along with Social Security optimization. I just want to let everybody know out there we do have a Social Security optimization program, which I think is probably the most elaborate that I've seen out there as far as offering the certification and training from leads to stress tests that you can run with your clients using the calculators, and then also a complete report. And the difference in our Social Security optimization program is we actually incorporate annuity products into the income stream, which pretty much makes the sale for you. Instead of going in and talking about Social Security, solving that problem, and then trying to convert them to an annuity or life sale, we actually incorporate that into the report, which I think is a great opportunity. So it looks like things have kind of settled down as far as people getting on the webinar here. So again, this is Mitch Whitney with Alternative Brokerage, and I thank everybody for taking time out of your day to join us on our Medicaid-friendly annuity webinar. Now, I'm going to tell you a little bit about alternative brokerage and some of the things that we offer our agents that work with us, and then we're going to get into the meat of the Medicaid-friendly annuity products. So some of the things that you're going to gain access to when you work with alternative brokerage is quality lead generation. We have multiple opportunities with groups that we work with and different partnerships for you to get in front of better and more qualified prospects. We do have the Social Security optimization program along with other programs that you can utilize to get in front of people. We have an agent healthcare plan that we've been working on. You can ask somebody in marketing to talk to you a little bit more about that. That's kind of an ever-changing, evolving platform that we've been working on. We do have automated drip marketing, ways for you to use email to stay in front of your current prospects and clients. We have a CRM system that comes to you at no cost, which I'm going to touch on here just quickly. And that's the same platform that we have our product search engine. If you're somebody that is looking for something to help see what's available for product, check rates, check commissions, and check all the different aspects of a product that we would want to know as an agent, we have a great way to do that on this product search engine. We have great concept and product training, product calculators that you can use. We have the platform that actually incorporates the lifetime income calculators right into the platform, so you don't have to log individually into the carrier sites to do that. And then there's also generic calculators as far as how long my money will last, Roth conversion calculators, everything that you would want right at your fingertips. It's kind of a home base or dashboard, if you will, for independent agents to use. I think that we've developed this team of people to provide great service. We all know that customer service has gone down in our industry and really any industry. As you well know, talking to some of these carriers and things is pretty painful, but we try to stay above the rest as far as offering great service. And we do have some website options. If you're looking for a web presence and somebody to help you with your social media marketing, we do have some of that as well. So I just want to touch quickly on a couple of those things that I mentioned there. And this is just going to take a little bit. It's kind of slow when you're doing the webinar here. But here's our website, www.alternativebrokerage.com. And you'll see right here we have Life Tools. And the Life Tools is we do have a term platform, which is an automated term system we feel it's the only way to do term insurance. We know that you don't make a ton of money on that, and neither do we, so we want to make that as painless as possible. And so we've developed that system. And then you'll also see our annuity tools login. And we have an annuity tools demo. So I'm just going to show you a few aspects to the annuity tools we have, but if you want to see more, go ahead and go out and click on the annuity tools demo. And this is the platform that I was discussing, which is the CRM system that you can use. You can import your clients and set tasks, follow-ups, put notes in there. And then there's also a product search engine. And this is really probably the neatest aspect of this, because you can put your state in here. You can choose whatever state you're in or whatever state you're going to be writing in. You can choose the product type, whether it be a multi-year guarantee or an FIA product. You can put as much or as little information into this. Let's say that you want to do a 70-year-old and you need at least a 5% premium bonus. You hit search. It's going to pull all the products in the state you selected with that criteria as far as the bonus, and you can put in much more information if you want to get more detailed. But then we can click on it, and it'll bring up a product highlight sheet that's just going to give you a breakdown of the product highlights that we would want to know as agents. As far as the bonus, you know, what's important, the premium bonus on all premium received during the first 7 contract years. You're going to be able to see the street commission, the indexing options, what riders are available, what the chargebacks are, state approvals, death benefit. So it makes it very simple to check out multiple products. And you can actually compare products side by side if you want to do a printout or present to your clients on your computer. So I just want to touch on that quickly. I know that that's a very fast showing of that aspect, which you can go into very, very detailed searches for. But you can also do a carrier analysis if you want to do an AM Best rating, or if you have a client that's going back and forth between a couple of carriers, you can pull up the vital signs right here and show them the differences as far as what their ratings are, their asset allocations, different things like that. And if you go to this resources tab, this is probably the second most used to the product search engine. Here's the generic calculators that I had mentioned with the effective yield, annuity advantage, how long will my money last. And then down below you have the integrated income rider calculators that you can use that'll take you directly into the carrier so that you don't have to log in individually. So that's available out there, and like I said, again, if you want to see that in more detail, go to alternativebrokerage.com. You can click on the annuity tools demo right here, and it'll walk you through that. So I just wanted to touch a little bit on some of the things that you get when you work with Alternative Brokerage. We have much more to offer, and if you call in after the webinar today, somebody in our marketing team can take you through that and show you a lot more of what we can do to help grow your business. So again, I don't want to keep you any longer. The real reason that everybody is showing up today is to talk about the Medicaid-friendly annuity product options and some of the things that that has to offer, ways to get in front of people and talk about their Medicaid planning. So without further ado, I want to introduce, oh, I just lost our screen here. There we go. I want to introduce John Williams, who is from the Standard. He's the regional sales director there. And he's going to tell you a little bit about the Standard, about their Medicaid-friendly products, and how you can work with them. So go ahead and take it away if you would, John.
Okay, thank you, Mitch. Thank you very much for the time, everyone. I do appreciate it. Today I'm going to be talking about Medicaid-compliant income, specifically to pay for long-term care. I want to include some information and share some information regarding the playing field that we're dealing with, or in regarding the sale and type of sales you look for, a little bit of the history of Medicaid compliant income and how it came about as far as allowing a spouse to qualify for Medicaid, some of the legislation that is behind that. I'm going to give, most importantly, probably the meat of the presentation is going to be a case example of a husband and wife situation, and I also want to share with you some information as to why you should do some business with the Standard. So we have been quoting this type of business for about 3 or 4 years, and it's been highly successful. We've had a terrific run of business and of being able to help people. And Mitch, it looks like I do not have control of the slides. If you want to share, give me control.
Yeah, buddy, let me.
Sorry about that,
Yeah.
everyone.
All right, see if you have control now, John.
Doesn't appear as though I'm able to toggle through the slides.
See if you can actually use your mouse on it once.
There we go. Okay, sorry folks, this is slide 2 now. Little history behind Medicaid compliant income. We all know the cost of long-term care. The cost of long-term care is going up. It's a substantial expense. And unfortunately, most folks, most couples don't do adequate planning. They don't usually purchase long-term individual standalone long-term care. They might do some Social Security planning and some retirement planning, but as far as long-term care, they're failing at that. What happens then is most people, or a great majority of people, rely on Medicaid to pay for their long-term care. 1 out of every 7 people in the United States relies on Medicaid. These are huge problems that we all have to face, and the scenario that I want to talk about today is primarily a couple who have assets, maybe not substantial assets where they feel as though they don't need they can self-insure for long-term care and have enough money to pay for it, but they do have enough assets that spend down is going to be a huge factor to them. They'd have to spend down their assets in order to qualify for long-term care. So as I mentioned, there's only a few different ways to pay for long-term care. You can deplete your savings account. You can purchase the long-term care insurance, which is obviously highly advisable. But many Americans just end up relying on Medicaid, which is not necessarily a bad thing, but it is something that you have to do some specialized planning for. And this is the opportunity that we all see is for these types of people who are going to use Medicaid to their advantage in order to qualify for long-term care. And Medicaid, the laws do allow for this. It actually came about in 1993. The Omnibus Budget Reconciliation Act allowed transferring of assets to annuities that are going to be set aside that are not going to be countable assets. And then in 2005, the Deficit Reduction Act actually expanded upon these rules. It actually made it more stringent in order to qualify for long-term care, allocating assets as non-countable in order to qualify for long-term care. But the laws are there, and we hope that you take advantage of them. The Deficit Reduction Act of 2005, as I mentioned, it extrapolated and made it more difficult for individuals to displace assets as a non-countable asset in order to qualify for long-term care. Some of these additional requirements that the law included was that you must name now the state Medicaid agency as the primary beneficiary on your annuity up to the amount Medicaid has spent for care. Also, the applicant, the Medicaid applicant, the individual who's in a long-term care facility, must disclose their interest in the annuity. The income annuity must be irrevocable and non-assignable. So once you do this type of planning, it's done. You can't undo it. It cannot be changed. Another requirement that the 2005 Act put on was that the annuity must be actuarially sound, which means that the annuity and income has to pay you back the entire purchase costs within the healthy spouse with their life expectancy. And you must provide for payments in equal amounts, no deferral, no balloon payments. So the laws are in place for a reason. They're stringent. We all have to abide by them in order for this asset to be a non-countable asset for Medicaid. and that's the whole gist of the presentation. So what is a Medicaid compliant annuity or Medicaid compliant income? It's designed to actually convert your traditional Medicaid spend down amount, or the assets that you would normally have to spend down in order to qualify for Medicaid. It's designed to allow an individual or a couple to allocate into an immediate annuity. It's actually a period certain immediate annuity based upon the healthy spouse's life expectancy, which I'll get into in a minute. But then it allows the other spouse, the not as healthy spouse, that is entering the long-term care facility, to qualify for Medicaid, and still allow the healthy spouse to stay in their home, receive an income that's not going to be countable, and so on. So the way that this is done is we issue a SPIA, an immediate annuity, a period certain immediate annuity based upon the healthy spouse's life expectancy as calculated by the Social Security Administration. And then we add what's called a restricted endorsement to the immediate annuity, which then allows the income to be Medicaid compliant in the eyes of the law. So the meat of the presentation, I want to go over a case study, and I've learned that this is the best way to explain this concept. Jennifer and Greg are married. Jennifer is 78, Greg is 80. They've got total countable assets of $426,500. Now, countable assets is a term that is used for Medicaid laws. They will look at your entire asset base, and long story short, most of your assets are going to be, quote, countable assets for Medicaid. In other words, you would normally have to spend down this amount to nearly poverty levels in order for an individual to qualify for long-term care, or for Medicaid, rather. Now, Jennifer, who's 78, is not in such good health. Greg is 80, and he is in good health and is staying at home, but Jennifer is about ready to enter a nursing home, or she could have just entered the nursing home. Obviously, this is going to be a huge cost item, around $6,000 a month, and this is all dependent upon where they live in the country, on how much the long-term care costs. But her nursing home care will deplete the entire $426,500 in less than 6 years, unless they do some type of a planning scenario. So the whole idea is to use a Medicaid compliant annuity or Medicaid compliant income to provide an income stream to Greg while he still stays at home, and then Jennifer can then go into long-term care facility and qualify, and still qualify for Medicaid. So that's the scenario and the setup. Federal law allows for the division of assets at the time either spouse then enters the nursing home, so that $426,500 is split $213,250 to each spouse. Now, the $213,000 is still too much for Greg to keep. It depends upon your state and your Medicaid laws, but usually Greg is able to keep approximately $110,000 to still stay below the maximum amount of countable assets for a community property spouse. And this does usually vary slightly by state. So Greg's balance, but in this scenario, we're going to allow him to keep $110,000. Greg's balance of $113,250 then combined with Jennifer's share, which remember is a little over $213,000, for a total of $326,500. This is the spend down amount. This is the amount that would need to be theoretically spent down to poverty level in order for Jennifer to qualify for Medicaid. Now, the idea is to place this $326,500 into a Medicaid compliant immediate annuity based upon Greg's life expectancy. Remember, he's the healthy one. He's the one who's going to be staying home. And this is all determined by the Social Security Administration, his life expectancy. At the standard, we quote this business. We have the Social Security tables. We know how to quote the period certain amount in order to coincide with Greg's life expectancy. Greg we know the Social Security tells us that Greg's life expectancy is 8 years and 1 month. So his $326,500 that is allocated into a Medicaid compliant income, we know that he will receive a monthly income of $3,485 for 8 years and 1 month. This is going to be not an countable asset. This is going to allow Jennifer then to qualify for long-term care. Now, this is one scenario of many scenarios. Most of these scenarios are husband and wife scenarios. In nearly all the cases that we deal with, there is a Medicaid expert or an elder care attorney involved as part of the planning team, along with the financial planner or the advisor, the financial advisor, because obviously we're dealing with state-specific Medicaid rules in regards to countable assets, what is countable, what isn't, qualification for Medicaid. So we really encourage all advisors who are writing this type of business to work with a qualified elder care attorney that is very well versed in each of the state's Medicaid laws. But this is how the application is then set up when it.
Hey, John.
Yes.
Just as you touch on that, I just want to let everybody know, too, before we get into this and after the case study, if you want to use your message board there to ask any questions, we know that there's a lot of different scenarios and things that come up. Go ahead and use your message board. We'll try to answer after this as many questions as possible. And, you know, if some of them are too in-depth, that's where you would probably have to contact a local expert there to help with that. But go ahead and use your message board to ask questions. We'll try to answer as many as possible. So, sorry, John, go ahead.
No problem, Mitch. I appreciate it. That's a great point. I'm giving a very simple scenario, a very cut and dried scenario with a husband and wife, just for simplicity reasons, so everyone can understand the concept and how it works. When the rubber meets the road and you're ready to write this business and issue a Medicaid compliant immediate annuity, this is how the application is set up in the great majority of cases. The owner, annuitant, and the payee is going to be the healthy spouse. This is the individual who wants to stay in the home. They want to keep their independence, yet they don't want to be beholden to the government and having to spend down a huge portion of their nest egg in order to have their spouse qualify for long-term care. The primary beneficiary in most every case is going to be the state Medicaid program up to the amount Medicaid is spent for care. This is a prerequisite in order for the Medicaid compliant income to be considered Medicaid compliant. There's obviously some disclosure forms. The restricted SPIA disclosure form is needed. That's an additional form. The signed copy of the contract endorsement, which is the restricted endorsement. The restrictions form is required. This is not normally required in sales that aren't this type of income, and also a signed copy of the restricted SPIA illustration. And we run the illustrations at our home office in Portland at the Standard. We're well versed in how to structure the illustration. As I mentioned before, we have the Social Security Administration tables readily available. We know if we have the date of birth of the client, what their life expectancy is going to be in order for this concept to work. So we're used to working with advisors. We're used to working with teams of advisors and elder care attorneys, and that's really kind of what helps set us apart. I kind of got ahead of myself a little bit. I was talking about working with elder care attorneys and how most of the sales, the advisor is working with an elder care attorney. I mentioned before that this Medicaid annuity, once it is issued with the restricted endorsement, that's pretty much it. It's non-transferable, it's non-forfeitable, it's non-assignable, it's non-commutable, it's irrevocable. You can't change the payee, you can't change the payment option, there's no cash value. All of these are prerequisites in order for this income to be considered Medicaid compliant in order to allow the spouse to qualify for Medicaid. So I guess the warning is, once you issue this business, that's it, and it cannot be changed, and in the eyes of the law, it's no longer a countable asset. as we progress here, why would you want to do business with the standard? I mentioned we've been doing and issuing Medicaid compliant income business for about 3 or 4 years. We actually quote and issue the business. There's not a lot of carriers out there anymore that are quoting this type of business and have and issue SPIAs with restricted endorsements on them. I think what happened back in 2005 when I mentioned that law that was passed, it made it a little bit more stringent, and the requirements a little bit more stringent. I think that some of the carriers decided to exit the business, but we still quote and issue the business, and we're looking for it. We've got experience in working with financial planners and elder care attorneys and teams, and in different states and different state Medicaid associations. None of us by any means are attorneys ourselves or experts in Medicaid specifically in specific states, but we have enough experience and enough exposure to it that we can usually be helpful. I think most importantly is also that we have maintained, the standard has maintained an A rating or higher for over 75 years. There's not a lot of other carriers out there with an A rating or better that are issuing and quoting this type of business, and we've maintained an A rating or better for a good long time. We're publicly traded. We're not owned by a hedge fund or anything of that nature. We're in it for the long term, obviously. The company is over 100 years old. We also offer very, very fast access to tenured employees with exceptionally fast turnarounds. We're not a huge carrier. We don't write billions of dollars of business. And in this case, it's not necessarily a bad thing, because that means you can get access to a tenured employee exceptionally fast, either through email, through 800 number, through Mitch and his team. We do issue Medicaid compliant SPIAs under 5-year period certains. This is an exception. There is an exception that's required for this, but we will usually go down to 4 years, 2 months, 4 years, 3 months, depending upon the case scenario. And we do have offer some client use educational materials that explain the concept in very basic terms that you can share with your client base. Let me pivot a little bit and share information. There's a couple different ways that we issue this Medicaid compliant immediate annuity business. As I mentioned, you can either just go directly into the SPIA initially, or what some people do is they will allocate funds and almost self-insure or allocate funds into a deferred annuity, and they can then save and defer and accumulate funds with the idea of earmarking those funds for long-term care business, long-term care expense down the road. And so they'll allocate into a traditional fixed annuity or an indexed annuity. They'll grow the business, and then at the time that one of the spouses then enters the long-term care facility, they'll then transition that deferred annuity into a Medicaid compliant income for the healthy spouse. And we are seeing more and more of this, because what the standard does with our deferred annuities is we will waive the surrender charge, if there is one, at the time they transition into a Medicaid compliant income. We also pay a second commission to the client on the accumulated value of the deferred annuity when they transition to Medicaid compliant income. So this is all dependent upon us and the type of products we build and fair dealings with the client. We think it's more than fair to the producer. It also is a big reliant upon what our current rates are on our traditional business, and also what our renewal rates are on our indexed business, because obviously you want to accumulate as quickly and as much as you possibly can. So one thing to take away is, and this is a marketing piece that we developed, this is an actual case scenario of an indexed annuity that was sold back in 2008, in December 2008. This is what the declared cap rates were and the earned interest, and you can tell that the renewal rates were absolutely pristine. We're one of the few companies that actually publishes our renewal rates on our producer website for anyone to scrutinize, and it really helps the client accumulate as rapidly as they can in a very efficient way if they're going to be saving for future long-term care costs. So I wanted to share that with you. With that, Mitch, if it's okay, I'll open it up to questions and see if we can answer any.
Yeah, and I just want to touch, and thanks, John, for the presentation. It's definitely an interesting topic, and I think that there's a lot that agents can do with this. And I just want to touch on a couple of things before we take questions. I don't know if everyone saw those renewal rates, but I'm going to go back to that slide. And if you look, I worked at the home office for years, not the standard, but another home office for a top index annuity company. And I don't think that there was ever a year where the renewal rates, if you look from 2009 to 2010, went up that much. I mean, we would see them go down some, and if they went up, it was maybe 10, 20 basis points. But for a company to increase the renewal rates like that, I think that that's something pretty special and unique about the standard. As John mentioned, an A-rated company, we feel like they're the company that you would probably sell to your grandparents because, of how well they treat their clients. Their service is great, and with renewal rates like that, they're pretty difficult to compete with. We see a lot of longer products with bonuses and, upfront first-year rates. But when you think about it, how long they're in that product, the renewal rates are really a very important aspect of that. So I just wanted to mention that again. And as far as some other products, they have a traditional fixed product, the standard does, and it's a flexible premium without a rolling surrender, which is kind of unique today. I mean, we used to see more of that back in the day, but they actually have a traditional fixed product that is, very popular out there because it's flexible premium without the rolling surrender. So I think that that's important too to bring up also. But as far as questions go, let's take a look and see what we have out there. I know that there's a lot of different scenarios and things that people have asked us. So let's go and see what we've got. As far as the sale of this, John, what is, if, the question has come up about excuse me, a single person instead of a husband and wife scenario, would this work for somebody who's single?
The answer to that question is yes, it very well could. It depends. It's a little more of a complex planning scenario. And in regard to a single individual, an elder care attorney is almost going to be a must. I shouldn't say substantially different than a couple, but it's enough different than this scenario that I just gave you in the presentation that you'll really need to talk to an elder care attorney on the best way to go about that. But that's the long answer to your short question, which is you can do this type of planning with a single individual.
Okay. The question has come up, is this going to be available? Yes, we are actually recording this so that you can go back through it. I know that we went through some things pretty fast. So this will be available after we're done today as a recording. Another question, does the income received by the healthy spouse affect Medicaid eligibility? I'm guessing for the person who's actually going into the long-term care facility.
The answer is it does. It does not count. It's not a countable asset. Now it's the whole premise behind the planning is you're allocating money into this Medicaid compliant income annuity. The healthy spouse then receives it. It's not considered a countable asset as far as Medicaid is concerned, and it allows the other spouse to then qualify for Medicaid, and the other healthy spouse still is able to keep their income.
Okay, and then I think you touched on this in the presentation, but maybe it was missed. What happens to the money after the passing of both the husband and the wife?
The money in the income that's received by the healthy spouse, the primary beneficiary is going to be the Medicaid Association. So you'll pay the Medicaid Association however much you paid for. Let me back up, because that's kind of a tough question. It's going to be dependent upon the state. I'm gonna pivot that way. Some states allow for the beneficiary like a non-spousal beneficiary to keep the money, the rest of the money that hasn't been paid out. Otherwise, it goes to the Medicaid Association up to the amount of care or amount that the other spouse has used. That's a complex question, really dependent upon the state Medicaid laws.
Okay, excellent. And those are just a few of the questions that came up. There was, quite a bit that went into much more detail that I don't think we're going to be able to cover on the call today. But there was a question of how to contact you, John, and I think that if you want to give them your contact information, or actually somebody on your team, if you would like them to reach out first to your marketing team, they can probably get some of those questions answered. They're more than welcome to also contact Alternative Brokerage, and we can access the standard. Our toll-free number, just so that everyone knows, is 855-779-1010, and that'll reach Alternative Brokerage. John, do you want to give them the information for who you would like them to contact at the standard?
Yeah, I'll just go back here. Let me see if do I have. I don't have control of that. I'll give you our 800 number, which is 800-378-4578. That goes into our home office, to our sales team in Portland. My direct line is area code 402-213-8626. And I'll do my best to answer the questions as best I can. I'm not an attorney, and I'm not totally up to date on every single state's Medicaid laws, but I can at least try to help out.
Yeah, we appreciate that, John. And here's Alternative Brokerage. Here's our number. We would obviously love the opportunity to answer any questions and also earn your business and your trust. And I just want to let everybody know that we do have an incentive. If you contract today, you can actually put an extra $600 in your pocket. And how you do that is, from the time that you contract, we give you 30, 60, and 90 days. And when you submit an application, and we would love it to be with the standard, but any application will work. The first one will give you 100, second one will give you 200, and the third one will give you 300. So you can actually combine that for $600 in extra money that you can spend however you want, marketing, trip, whatever you want to do for $600. So if you contract today, we'll make sure to get you in that program, and we would love to help you in any way possible. Again, here is our number, 1-855-779-1010. Again, our website is www.alternativebrokerage.com. And I want to thank you again, John, for getting on the call with us, introducing us to the standard and some of these Medicaid-friendly aspects to your products. I think that there's a huge opportunity for agents. To be honest, there's a lot of people out there that aren't contracted with the standard. And I know, as John said, the standard is not an enormous company, so we would love to get you contracted as soon as possible, because the contracting department can get backed up, and we want you to be able to write as soon as you get something that crosses your desk there. So again, I thank you, John, and I thank everybody for taking the time to get on the call today. We look forward to working with you.
Thank you, Mitch.
Thanks, John.